Well, thank you all for being here. Unfortunately, this morning, Vinny's feeling a little under the weather, so we've got, the show must go on, so we've got two great panelists here. We've got Marwan, who's the CEO and founder of Veem, awesome company that's really a leader in B2B payments that's using the blockchain. We've got Jose, who's the head of new business development at BBVA, very, very forward-thinking bank in all things digital. And I'm going to give them a few minutes to introduce themselves. I'm going to ask some questions, and then we're going to leave it to, we're going to leave about 10 minutes at the end for the audience to ask questions. So think about questions now. And before I do that, let me just quickly introduce myself and Core Innovation Capital. So we are a early stage VC fund that specifically focuses on FinTech, seed Series A. Based in San Francisco and LA. We like to lead, we like to co-invest, we like to look at all sorts of things in the frontier, including cryptocurrency. We are investors in Ripple. And I've been doing this for 3 years now. I've started a couple different companies. I've spent a lot of time in finance, but really excited to be here and talking about the cutting edge of financial services. So Marwan, why don't you kick us off? Could you just tell us a little bit about your background and a little bit about what Veem does and how you guys are innovating in the space?
All right, thank you, Alex. Good morning, everyone. We started the business 2014. We really wanted to simplify cross-border payments. Kind of what Paul was saying earlier in the session, you know how you go in the morning to get your coffee and you don't think about the way you pay, you just do it. When it comes to international payments, it's the opposite of simplicity. If you're moving money to India, China, or anywhere else in the world, it is a real pain experience to both the payer that's sending the funds as well as the receiver that's receiving the funds. And so we wanted to really simplify all this. We ended up coming up with a product that essentially allows you to email money to anywhere in the world. It's restricted for business use at the moment, so it's business-to-business payments. But essentially you log in, you enter the email address of the receiver, the amount of money you owe, and you send the payment. That level of simplicity happens because the underlying infrastructure makes it simple like this. We use a concept called multi-rail, which is essentially a way to route payments on multiple types of rails. So we use the blockchain, we use our own bank accounts in a bunch of countries, we use existing payment processors, we have access to SWIFT, so we use multiple methods to route the payment. And on a per payment basis, we route depending on what's the most efficient rail. So that's what we do in a nutshell. I've been in payments for a long time. I used to have my own company called eBillMe, sold to Western Union, ran e-commerce for them, and then after a couple of years, we went back to entrepreneurship and started Veem.
Jose, why don't you tell us a little bit about you and BBVA?
Absolutely. As Alex was saying, I run a venture creation and new business for the digital side of BBVA. For those of you in the room who might not know BBVA, we are a universal bank. Our footprint is Europe, Latin America, and the US, 50 billion in market cap. I think that the only thing that is actually unique about BBVA is I believe we are the only large cap bank whose executive chairman used to be a software developer whose CEO was appointed because he used to run the digital side of BBVA, and we are very much invested in becoming the top digital bank in the world. Pertaining to the conversation today around crypto and blockchain, a few of the things that we have done and are more visible is we are investors in Coinbase through our venture capital fund. We were one of the original 9 banks that joined R3, the ELT consortium. We're part of the Hyperledger and the Ethereum Enterprise Alliance organizations. And I think that as per last week, we had done the first international money movement using Ripple between Europe and Mexico from bank account to bank account.
Great, thank you. I want to kick it off with a question to just sort of frame where we are in basically the adoption of Bitcoin, all the other cryptocurrencies in the blockchain. And I want to frame it in terms of innings, of baseball innings. When you think about where we are now and where we've come, what inning do you think we're in and why? And how much more do we have to go?
Well, it sort of depends on the application you're using the blockchain for, and specifically the countries that you're operating in. So there's not a universal picture in terms of where we at. From my point of view, I think payments is a more concrete concept at this stage compared to other applications on top of the blockchain, so like insurance concepts or contract management concepts. And within the payment world, some countries, for example, Europe, some parts of Asia are well developed, and there's quite a bit of activity that's going on. Other parts of the world is not as developed. Liquidity is still fairly thin, and the number of players that exist is not as developed as the other parts of the world. So the evolution cycle and the maturity varies by region and by type of application. It's not all uniform.
I agree. I would say that some of the stuff we're probably on the second inning, as Marwan was saying. Probably payments is one of those spaces. In some other spaces, we are singing the national anthem. So we are at the very, very beginning of it. Stuff that is coming, application-specific tokens, applications to identity in our space and the banking space, things around security settlement, compliance. Those are very, very early movements.
So, you talk a little bit about payments is maybe a little bit further ahead, and there's a few other things that are really exciting that are just getting off the ground. What are the use cases that are just emerging right now? And if you're an entrepreneur and you're thinking about starting a business in this space, like what are the opportunities that are emerging today that are most exciting?
I can start. So a few of the things that we are very, very interested in. Some of that is what we would call probably more sustaining innovation than disruption. A lot of what you're seeing on the federated environments, distributed ledger space more than the pure blockchain has to do with reducing the cost for the banks. That's commercial banking, wholesale banking, increasing the speed on things like security settlements, the hard-boring things that actually save a ton of money for the banks. If you're operating in that space, banks will listen to you and will want to engage. On the more esoteric stuff, things around identity and compliance, anything that benefits from having a single version of the truth, that's something that we believe, or I believe personally, is going to be very important in the future. And I am actually quite excited about opportunities that this type of technologies offer to monetize open source. The whole space about application-specific tokens, what we're seeing happen around things like Golem or Saya are extremely exciting for us.
Yeah, just to add, I think in general, elimination of the middleman is a great opportunity for anything blockchain, because you're essentially using alternative technology to bypass established infrastructure. So I think that's one key area. So like in payments, elimination of correspondent banking, that's where the blockchain is interesting. In other areas where you can track and verify, anything that requires high tracking and high verification, there's opportunity for the blockchain. So that naturally extends to issuance of assets, identity management actually, and KYC. There's a lot of opportunity in that direction.
You talk about removing the middleman, you talk about sort of the idea of trust, right? And removing the necessity for a trusted central party in blockchain. And as an investor, I always think about this, like where do we have really good trusted central parties, and where is there a real gap? Because I think it's easy, if you're an entrepreneur, you're looking at Bitcoin, a little bit of this is you've got this hammer and everything looks like a nail. So I guess the question is, where are sort of the weak spots? I mean, is there a real need for trust, either in the US, overseas, and in what industries?
So it's a complicated question, and so that trust thing. So trust is how do you establish trust? It's a function of communication. It's a function of tracking, transparency, and it's a function of removing layers. Because the more layers you have in an ecosystem, the more likely that trust starts to disintegrate, because you have just a lot of players in the middle. And so now when you think of this, especially when it comes to payments and moving money is all about trust. Like money doesn't really move unless the parties trust each other and the party that's moving the money for them. So it's kind of like it's an interesting puzzle. Like on one hand, technology enables you to move things faster by eliminating middlemen, by increasing transparency, increasing tracking, which by default enhances the trust in the function of moving the money. But at the same time, that underlying technology needs to be reliable enough, secure enough, scalable enough, so that you can actually use it in a scalable manner, so that the parties that are now working with the new systems are able to trust it to get volume and get the application going. So it has like a sort of a funny combination of things. It simplifies. On the other hand, it does require that the underlying infrastructure to be rugged enough, simple enough, so for that simplification to yield results to the customer.
Yeah. What I would add to Marwan is the way we look at that when we think about good use cases for this type of technology. On the one side, you need a fragmentation of parties. If there is just 7 or 8 parties that need coordinate, probably you don't need such a massive deployment. So fragmentation of parties is one. How relevant the speed of the transaction is another one, and how important is interoperability is probably the third one. There are many scenarios in which that does not happen. Why did we join R3 and the other wholesale banking consortium? It's a limited number of partners. So a federated environment is absolutely fine for that. And what you need is really, really, really fast transaction time. Very difficult to obtain on a blockchain environment. Stuff like, for instance, what Spotify is doing with rights management for artists. How do you make sure that you can trace when a song has been played and make sure that you're paying the right amount of royalties? That is a very good use case for a permissionless environment. And I think that we'll see more vertical applications of that. And in some cases, for instance, stuff like what Marwan is doing at Veem, I think we will see more rail-neutral companies on the payments space. And for some transactions, you should route that on a blockchain environment. For some others, you can use existing rails or something else.
Jose, could you talk a little bit about how you work with entrepreneurs who come to you and what you're looking for, and any advice to entrepreneurs or people looking to partner with someone like BBVA?
Sure. A few weeks back, we had the CEO summit of our venture capital fund, Propel Venture Partners, whose base my colleagues have been in San Francisco. And we had a panel in which I was grilled by many CEOs from startups saying how difficult it is to work with BBVA in particular, but with banks in general. I think that there are a few tips that you guys can use when you approach a financial institution. Some of the things are impossible to solve. So one of the roadblocks that you're going to find is if your product or your application does not enable for knowing your counterpart, that's something that is not driven by the bank, it's driven by regulation. But we will not be able to operate in a way in which we send money out and we don't know where the money is going. So that's one fundamental part of the system that is there, and we need to deal with that. The other thing that I would suggest is get ready to go, understand the vendor management process of a bank. Vendor management is going to be a huge part of the life of financial institutions in the next few years. I think it's an aspect of that is less understood by the ecosystem in general. And again, it's driven by regulation. There is some stuff that banks can do, but it's going to be complicated to navigate. And the third is probably the most important one, is make sure that when you engage with a financial institution, you are talking to the right person. So beware many innovation departments. You can die from 1,000 proofs of concept. When I engage, because it's going to take time, you're going to be investing resources, you don't know if the person who's on the other side actually has the power to make a decision or not. I've been talking to many colleagues who are saying, yeah, I will not do more proofs of concept with banks unless I charge for them. I don't think that's the solution, because for the person who's on the other side, actually writing a check for $30,000 for a proof of concept, that it will not prevent you guys spending time that is not well spent and is scarce for you. So make sure that the person you have on the other side of the discussion is the right person to talk to.
We've seen a pretty big uptick in both price and volume across almost every single cryptocurrency in the past little while. I think the total market cap now is something like $40 billion. I just checked before this panel, which is quite a lot when you think about it, and it shows how far we've come. What have you seen, Marwan? Because you're very close to this on a day-to-day. What are you seeing in terms of adoption of all of these cryptocurrencies, in terms of liquidity and the exchanges getting up to speed?
So I mean, I've been doing this since 2014. So the first Bitcoin conference I went to, there was a lot of like dogs in the room, and a lot of folks that this is their first time hearing about Bitcoin and showing up to these conferences and like, what is this about? Now the industry is a lot more mature, a lot of suits and big companies involved. The industry in general has matured a lot. The liquidity has been increasing. The bid-ask spread has been getting tighter. There's a lot more exchanges in different parts of the world. Some of these exchanges got their act together, and now they have a business that they're operating that's self-sufficient or sustainable. All that within like 2-3 years. So, despite the fact that it's still, like in the world of foreign exchange, Bitcoin is still rounding error compared to what happens in the world of big money. But it's maturing quite a bit, and there's always development. There's a lot of new applications. There's money still pouring into that industry. So it has all the foundations to get it to a bigger stage. It's just like anything new. It takes time to harden it and to make it scalable. So it's getting there. That's why the transaction volume also keeps going up. There's just more applications going on.
So, we talked a little bit about this before, but I want to talk about common pitfalls that entrepreneurs make. And I'll sort of, when they're sort of exploring in this space, and I'll give one example that I see a lot, which is this sort of the, nail and hammer issue, where I think a lot of people come into a startup and they basically say, hey, I've got the blockchain, and assume immediately that any sort of central middleman needs to be taken out, and what they don't realize is this inertia of the system that keeps that middleman in, and how hard that is to displace. And usually the thing that I would advise those entrepreneurs is make sure that, like in any other product that you make in tech, that it's like 10x better, right? Creates so much value that you can't help but move away from the status quo. So that would be sort of my piece of advice, and that's probably where I see most entrepreneurs make the biggest mistake, which is, do you really need the blockchain for this, or is the status quo okay? I'd love to get your thoughts on what common mistakes do entrepreneurs make in this market.
Well, like it's exactly what you said. It's sort of fashionable to go to VC pitches and put the blockchain and sort of try to get attention by having the blockchain story in there. But it's really, what's really important is to understand what actually is the blockchain doing, and why can you not do this without the blockchain. That's really the key thing. Because there's a lot of things you could do without actually having the blockchain in place. It's just, the key thing to think about, it's just tool in a toolbox. Like if your entire pitch is dependent on this new technology, I think you'll quickly find out that you're going to be disappointed, because it's really hard to build a business around a technology that is first new, and second, if you don't have a business model and a use case, regardless of whether the technology is cool, at the end of the day, somebody has to cut you a check and pay you for the use case. So there's I see a lot of stuff in the industry that's like that, blockchain everywhere, and we're not exactly sure why it's actually in there. And having said that, there's also a lot of cool applications that are coming up that are really interesting use cases of the blockchain, and they're really difficult to do without that technology in place. And I think these are the ones that are more interesting to look into.
Yeah, I think that there is a tendency to spice things up by dropping the blockchain word and machine learning these days and a few others. And people on the other side of the table are getting smarter all the time. So you cannot get away with that just by using fancy words on the pitch. I think that, Alex, you're much better positioned to give the VC view. On the strategic or industrial investor point of view, one thing that we really, really appreciate is industry knowledge. Definitely in regulated industries, that applies to FinTech, but it will apply, I guess, also to healthcare and education and some others. You need to understand the specific problem that you're trying to solve. We talk to many entrepreneurs who come up with a great idea around the technology, and the expertise is clearly on the technical side of it, and they're trying to apply that to KYC or compliance or one of the hairy things that you need to deal in the financial services industry every day. And some of the points are incredibly naive in the sense that you realize very quickly that this person has spent 4 weeks talking about compliance and will not resist the grilling of a chief compliance officer of a bank. So if you want to get into the regulated industry space, really, 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 it's great to have the technical founder. You need an industry founder as well, somebody who really understands the problem.
That's great advice. I've got one more question, and then we're going to open it up to the audience. So last question here is, you have $1 million to spend, and you got to invest it in something, in cryptocurrency or blockchain. That could be a couple of companies, it could be a specific cryptocurrency, or it could be the basket of cryptocurrency. How would you allocate that $1 million? And you can't say Veem.
No.
Obviously, we would all put all of that money into
biased.
Veem. But other than that.
I think that half of that, given the industry we operated, I would devote to things that are related to RegTech. As I say, identity and compliance are probably the ones that are higher up in my list. The riskiest money, I would say I would put on this idea of application-specific tokens. The fact that you can now invest through tokens at the low level of the protocol in a way that you could not invest in SMTP back in the day, or you could not invest directly in Linux. You had to invest on proxies for that through those companies. The fact that you are closer to being able to do that is very, very risky, but it's extremely exciting.
Put it in Veem. No, I think just to add to the note here, I think there's a lot of, I would say that KYC is a really difficult topic, and especially if you do international KYC, it compounds like the magnitude of the problem, and there's opportunities for the blockchain to help in that area. The amount of work is required, and the duplication of work that happens in the industry for all parts of the chain to each party vet who they're dealing with, that duplication, there's opportunities for simplification that I think that area I'm fairly bullish on, outside of payments.
Great, thank you. Well, let's open up to the audience. I don't know if there's someone walking around with a mic, but I'd love to start taking questions. Over there? Man in the front? The jacket?
Yeah. Well, I'll speak loud. The cryptocurrency market is growing, and it's grown to about 30 billion turnover versus the foreign exchange market, which seems to have peaked at 5 trillion. So there seems to be two problems with the crypto market. One is that the blockchain technology makes it such that you don't get, the system takes a long time to react to pricing. And the other thing is there's a very high volatility vis-a-vis the foreign exchange market. So these are two things I think that are keeping it going. Any comments on those?
Well, so volatility is, when we use the blockchain, in our context, volatility doesn't really matter because we get in and out. So the blockchain is really a translation layer only. So it doesn't really matter what the price is, and we don't wait for confirmations to happen for the payment to execute. So there's workarounds on the volatility issue. And in terms of the technical limitations, I think that the limitations are an issue. They're an issue down the road more than today. There's capacity still on the network. But as the volume increases, there will be constraints. Having said that, at the end of the day, it's also a piece of code. So you can change code, and you can open up capacity, and these are solvable problems.
Yeah, I would add to what Marwan said. Volatility is in part happens by design, as you are saying. You can get in and out and neutralize that in a certain way. But the way that it's constructed, there will be volatility. On the currency use case, there are fundamental things that a fiat currency can do that crypto will not be able to do, and some very good use cases for crypto as a currency, and some things for which you do need a lender of last resort and a central issuer. I don't know if we're going to see real volume until, or eventually it's going to be a breakout of a central bank-backed digital currency. I think we will see that, and there are a number of regulators who are looking into it.
One quick comment to it's okay for payments industry to do a quick in and out so that volatility doesn't matter. But the liquidity depends on the speculators being there too. And they are very much aware of the volatility issue.
Absolutely.
So liquidity is actually the biggest problem in the blockchain. I mean, of all the things people talk about, the technical issues, it's actually liquidity. So as liquidity increases, it matures. Essentially, volatility decreases with liquidity increasing. So that's actually the real driver of why the industry hasn't matured more, is because there needs more liquidity in it.
Yep. And the more people transact in the blockchain who are not just speculating, but are actually transacting because they need to transact, the more you're going to see that the volatility decrease, like in any other market. Over there.
I want to speak up. It's interesting that you mentioned that you don't always need the blockchain for many applications. One of the areas that intrigues me is the idea of micropayments. So, like, let's say you have a Facebook where it's paying you a 10% for each post kind of thing. Or you create forums where you can create small amounts of payments for little services that you couldn't do, that you possibly couldn't do with real currency. Are you seeing applications like that? And from a bank's point of view, have there been banks that have done pilots with cryptocurrencies where you can create products based on this kind of thinking?
I can take the question about the bank. So I think that micropayments and digital goods is a very good example of that. Obviously, the existing payment rails are not efficient for very, very small transactions. So that's a fact. Crypto is one way to solve for that. It is. Can you do it without crypto? Yeah, there's been a bunch of wallets for digital goods that have been around for a long time that were not using crypto. Can you do that at scale? I don't know, because again, then most of them are based on some type of prepayment into a traditional instrument. But micropayments is one use case. You were asking about another use case. I think that Veem is a beautiful example of one of those use cases, which is B2B payments cross-border. The whole system around cross-border is designed to make sure that the money gets safely to the other side, not that it gets quickly to the other side. So I think that that's a very good use case for that. The last part of the question, I think, was banks doing pilots with cryptocurrencies. All day long. I mean, as I said, you can die of 1,000 proofs of concept. There are parts in which, there are spaces in which I think that banks are more comfortable in taking things to production environments and building that at scale. But so far, I think that most of them are on the federated space. So it's banks talking to other banks where you don't trust the network as a whole. There are enough supervision that you can trust each other because you know who are the other 6 institutions. But that's the training wheels, and there's a ton of value. The kind of part of the derision we get on that is, hey, this is just a distributed database. Well, there are great use cases for distributed database, and we will use them.
Yeah, and just a couple other notes on micropayments. If you think about blockchains, I think is a great tool for this, but M-Pesa in Africa and Venmo here don't use the blockchain. You could argue that both of them are great use cases. One other question right here, and then we'll wrap up.
So we designed the system so that there's an API. Underneath the API, there's a bunch of cryptos. It could be Bitcoin blockchain, could be private blockchain, could be Ripple, Ethereum. We can swap in and out. The user actually doesn't see any of that. It's sort of behind the scene routing. And all of them have their trade-offs. There isn't like one thing and it solves all the problems. They all have, it's more like, depending on what you're actually trying to do, different technologies function better for that context. So there's situations where the Bitcoin blockchain is actually a very good and efficient model. Despite the fact that everybody beats up on it, it actually is functional and works. There are other models that are alternatives to that are either private or public. On paper, they look good, but when you actually try to do it, there's not enough liquidity compared to the Bitcoin blockchain. So then you go back to a model where, yeah, it's interesting, but it's not usable yet. So it's sort of, there isn't like a model where one thing fits all. It's by geography, it's by timing of the payments, by size of payment, then you figure out which technology fits best.
I think we are all out of time here, unfortunately. We'll be somewhere around here. You can come over and ask us more questions. But just want to say thank you to our panelists and thank you to all of you for asking great questions and being here. Thank you.
Thank you.